Woo, Jose, look, man, it was rough tonight, but we are live. Are you ready to kick this thing out, brother?
Let's do this, man.
Do it, baby. Hey.
Oh.
Hey, man, we are this game tonight. I ain't got no horn tonight. Look, everything is rough tonight. I don't even know what happened.
I might well just do the whole podcast like this, man. I don't know.
All right, y'all. What to do, KTTV? This is KT, and we are here for another episode of the AdminisTraders Podcast. I am KT, and with my co-host
JoJo, baby.
Now, it has been a crazy day. We took a few weeks off. School just started. Man, what happened to the air horns tonight, man? We got to figure this out because I'm still. There we go, baby. You heard that?
Yeah.
Oh, we up here, so look, it has been a long few weeks since July 8th, somewhere up in there, man. Woo, man, how you feeling, brother?
Dude, I'm tired.
Hey, man, look, man, I talk to the teachers. I say, God, y'all know it's just the first week, man. Everybody say, I'm so tired. I've been I say, hey, we got a long way to go, man. Just keep on pushing. But the biggest thing, man, for us, our falls are always slow. And then around the springtime, that's when it pick up. So I've learned to enjoy these times because it's truly and sometimes the calm before the storm, man. So, kids are getting into it, bumping heads already. So we got a few that'll be coming over soon. So it's just, hey, we in this thing, man. Besides that, brother, how was your day today, man?
Man, it was good. One thing to keep on going with what you were saying, man, is I'm curious to see when we started, who's gonna be there.
Yeah.
When we end in May, who's gonna be left? Because we've already had two.
Look,
so hey.
Look, man. I don't know, man. If people think this is easy. What I don't know what they think, man. Like when people come into it and then that real life hit them, then they be like, yeah, this ain't what I thought it was gonna be. I just wanted to work 187 days, and next thing you know, they gone, man. Gone, man. And so I understand how it is, man. So we just gonna keep on working, crossing our fingers, hoping that we don't end up in the classroom. Hey, look. Other than that, man, I think the markets have been the markets.
Yeah.
We got a big, nice run on SPY today, man. Almost back at all-time highs. China carry. That China trade really did a number on us, bro. But if you were on your toes, then that China trade was a great rate for you to be able to capitalize on some things. And so remember what we always say, when people are fearful, that is your time to be greedy. When people are greedy, that is your time to be fearful. So kind of look at what's happening, make that change, man. So I guess as we get into things, man, I want to jump into a little bit of that news because I've been telling y'all rate cuts will be coming. Just hold tight, keep buying through the things. And now rate cuts are here. So let's get to a little bit of news tonight. Hold up, wait a minute, man. We can't get into no news yet, bro. I forgot I redid the computer, man. Hold up, man. Let me get into this. Hold up, let me reset back up for us tonight. Y'all can tell we've been on a little break tonight because it's been rough around here. Y'all, technical difficulties happen. I had to reset the entire computer before we got on. And technology is wonderful when it works. It's just them times when it don't that you got to kind of fend yourself out here, man. Let me see here. So I want to go back and look at money moves to consider ahead of the rate cut. So let's jump into this. tonight comes from CNBC. Of course, you know, if you up early, you squawk everything, y'all, even the podcast. So tonight is talking about rate cuts. If you've been keeping up with Uncle Jerome, he's been saying that he thinks it's time because right now they're in a fine line between unemployment and the job market crashing versus being able to have a soft landing and institute a few rate cuts that will kind of start easing the tensions of people being wall to wall in the pockets. And so what we're looking at tonight is how do you position yourself to benefit from the first rate cut in years? So you remember, I want to say they start tightening the policy right after COVID. What we say about 21?
Mm-hmm.
Maybe 21, 22, they raising up. And so we're going to raise another 50 points, another 25. And so now we have fought the good fight and it's time. So according to CNBC, the Federal Reserve could start lowering interest rates as soon as next month based on the inflation data. So we had the CPI last week, we had the PPI, and so that's producer price index, consumer price index, and all of these numbers came in lower than expectations. Unemployment job claims came in lower than expectations. And so we did have one hot month, but everything has been doing a little cooling off, and it is really setting the time for the rate cuts. So let's kind of jump into, let's see what we got here. What happened to my news here? Oh my God. Well, I tell you, bro, it's all over the place tonight. All right, for Americans struggling to keep up with sky-high interest charges, a likely September rate cut may bring some welcome relief, even more so with the right planning. So if you're a consumer, now it's time to say, what does my spending look like? Where would my money grow and grow the most, and what options do I have, right? So if you are looking at, if you're just looking at making money, or you're looking at where you need to be moving next, let me see why this thing keep on doing that. Then those are some of the questions that you need to ask yourself. Man, I don't know why my data keep on going crazy, bro. I don't know what's happening. I'm stressed. All right.
Boy got that cyber attack.
Hey, man, look, bro, it could be what it is, man. Let me see what's happening here.
Boy, clicked on that website.
Yeah, man. I got the fake. Oh, them boys say you got to create an account. Hey, so look, this is what we're going to say, y'all. For the biggest thing is, and we'll talk about that tonight, we're going to look at some gold, right? Because you think about when interest rates start to go, the dollar gets a little weaker. And so then gold gets a little cheaper. People pile in. They say gold is where to be. So right now we'll talk about gold tonight. We'll talk about looking at your interest rate. So you think about your T-bills. You think about all those places that were given 5%, right, on your money. Once rate cuts happen, those pieces will go down. So you want to always get ready to lock in some of those rate cuts. I think the biggest thing, paying down your credit card debt, right? So interest on rates on variable debt on credit cards are likely to follow, reducing monthly payments. But even then, APRs will only ease off extremely high levels, right? So rather than wait for small adjustments in the months ahead, switch now to zero interest balance credit cards and then consolidate paying off the high interest cards. Also, consider the right time to finance a big purchase. So if you're looking to make a major purchase like a home or a car, then it may pay to wait, since lower interest rates could reduce the cost of financing the road. So I'm kind of twofold in this, as I went and bought a car this weekend. The biggest thing is, if I say that I want to get a lower interest rates, well, interest rates are cut, I've only paid one payment, right? And so then next month, the month after, I can always go and say, hey, interest rates are dropped. Let me go ahead and redo this loan at a lower interest rate, and I still haven't dropped too much equity on the other side. And so those are always pieces to look at. But if you want to, like you said, next month starts the untightening cycle. And so you can always kind of wait a little bit more. Also, like I said, considering the right time to refinance, right? So fixed rates on private refinance are low as 5% and high as 11%. So financing a federal loan in the private student loan will forgo safety nets that come with federal loans for the people that's coming. But be mindful of potential long-term extensions. Woo! Look, man, I think them payments coming back.
Mm-hmm.
Ooh, thank God that ain't me, man. All right, next one. Perfect your credit score. So those with better credit could already qualify lower interest rates. So when it comes to auto loans, for instance, there's no question inflation has hit. The average on a 5-year new car loan is nearly 8%. So, for example, if a reduction of a quarter percentage point on a rates on a $35,000 5-year loan is $4 a month, he calculated. So that's $5 a month. That $4 a month. That ain't that much, man. No, but you got to think though, when it started getting ready to drop, that 4, and then we go 100 points. That's almost $16, $20 that you're getting anything cheaper on. And when you think about that over $40,000, those $20 will start to add up. And Jose, anything you got to add to that?
I just, debt. If you have it, pay. Do what you can. Especially if the opportunity presents itself. But because a lot of the big investors and all that, they talk about. Can you hear me? They talk about moving their money around all the time when it comes to like either refinancing something or getting out of one loan into another that's cheaper. So that these rate cuts are coming quickly. That's something we could do, and then just save that money, have cash on the sidelines, man, because when it rips in the market, man, you want to be part of something special.
You want to be part of something special, man, and I guarantee you, like I said, I've been talking to people about bonds, right? So you think about either you can go TMF, which is triple leverage, or you can go TLT, because once again, when those rate cuts happen, those bonds are really going to begin to take off, right? And so I'm looking at right now, my TMF is at $58. You got to think I've been buying in this since like $40, right? And so I'm up to almost 100. And so in 1 year from now, I'm looking at that TMF to be $100 or more than $100 a year from now. And so that could be, a lot of money, right? Because I'm steady putting. Every pullback we have, I'm buying more. And so really just positioning myself for when we have lower interest rates, man. Try to get this bag, baby.
Oh yeah, definitely. We've been talking about that for a while now, trying to be ready. And if you were attending the last time we came on, we talked about leap calls. You're talking past January, looking into March and June, and I think we had a good opportunity, even right before the break that we took, to start loading up on really long-term stuff when it comes, because if you buy a stock, you can own that thing forever. You just remember that. But if you're buying, you always want to add to it on any time the price fluctuates to the downside. But when you're talking about options, and you're talking about expiration dates, you start looking long, to where you got leaps is what they're called. Anything 6 months, even 3 months out. That's what we were starting to do there for a while, if you were paying attention. So some of those calls that we got in are starting to look good, but KT will go into in a few minutes. We still got a ways to go when it comes to that market fear and greed index. So
yeah, man. All right, man. So what we'll do, what a great segue. Let's jump into some of our fear and greed and kind of look at what this market is doing, because like I said in the beginning, today was crazy. Oh, wait a minute. Where's the man? All right, y'all. First thing we'll do, we will jump into the heat check tonight. And if you can look at the S&P 500, we have a lot of stocks that have been moving up. But what do we see? Big tech is coming back. Yeah, boy. Say, man, if you look at NVIDIA, Google, Microsoft, ABGO, we have technology running rampant out in these streets today. So all of the investing that we were doing back then and we've been talking about is now paying off, right? Because we always were saying, don't sleep on good companies that are cooling off, because now everything is coming back. We look at NVIDIA up 4% today. Google up 2%. Google just crashed a few days ago. Netflix, if you look at Netflix over the past few days, you think about Netflix right here, August 5th. I want to be quiet real quick. Jose, did you hear that date I just said?
The 5th?
August 5th. Today is the 19th. Netflix was $598. Today, Netflix closed at $688.
Wow.
What happened? Remember, Netflix owner came out and said, I'm donating blah, blah, blah money to Kamala Harris's campaign. I don't know who he pissed off, but whoever it was, Netflix went from 685 all the way down to 598. They didn't even come down to where it bounced the last two times. They just want to teach him a lesson, and then they ran it back up. Let's keep going over here.
There you go.
Oh my God. Oh, let's talk about this magical, whimsical stock called Tesla. Jose, when do we tell people to buy?
Man, we've been almost every segment.
It had to be way.
It was back when we were what? I know we mentioned it under 200. I know it was about 180. I think it might have even been at 150 at some point when we said get this test.
Man, I'm thinking like all the way back over here. We preaching. All right, y'all. It's gonna go up. It's gonna come up. Bam, right here, 140, 142 people. This was April 22nd, 2024. Tesla went from 142 all the way up to $263. Came back down a little bit, kicked up, but what happened? We are back on the upside. So we just trying to show y'all tech has been coming back, but this one here, boy.
Oh, yeah.
Did you see this McDonald's today, man?
Man.
Look, 267 August 9th, 287. And y'all, we showing this because people say, well, I don't have this. I got this. You can get in Robinhood, put you $100 on this. So if you would have got right here, put you $134, $135. You at least would have had at least about $30 extra dollars to add to that in a few days, man. Take that out and reinvest it into something else. And then just keep going till you get a full share. But come on, man. Heat map is out here. Walmart has been running. So if you look at overall, stocks are recovering. We'll get, like Jose said, into the heat map. Into the fear and greed and kind of look at where the sentiment is. But if you look at the market today, big tech stocks, financials, everything has been going green today. So I think this is just a testament of what to come. It's an election year. There's always a possibility we could have one more quick pullback, but I think after that, we prepare for election and we take off. What you got to say on the heat map, Jose?
I do. I agree with you. And I'm going to go ahead and also say that it doesn't even matter who the winner is or who, because as long as we have we're heading into the election, with more or less knowing who's going to win, I think we'll be okay. I hear talks out of both camps about taxes, and so I think once the investor or the big institutions understand who's going to be more favorable for them for their taxes, that's all that matters to a lot of people. Is like, how much tax am I going to have to give up when I play in the stock market? I also feel like things come in cycles, and so tech fell out of grace with a lot of people, even as far back as 2 months ago. But now we're seeing a little comeback on tech. But I gotta say one thing, KT, before we go home. How about Starbucks?
Woo! Jose, you call that Starbucks, man. That's what I say. I'm looking at from Starbucks. Now, don't get me wrong. I told people about the Starbucks, but I was screaming shares simply for the fact of it was $70, man.
Yeah.
It's Starbucks. I rose at Starbucks at 112 for a long time.
Yeah.
And so Jose said, of course, grab your options. Jose, man, just for the thrill of it, man, just give us the percentage that you had off that Starbucks.
Well, I'll say this. I had, when we were talking about Starbucks, and I had bought those calls for, and I'm talking about January calls back when Starbucks was 80, then when it was 75, 72, 70, in that area. I said, I even did a chart of the coffee to go with it, and how coffee was on the up and up, which could have easily played into Starbucks' earnings that they had. The price of coffee is going up. They got to raise their prices. They're making money off this coffee, but $100 calls for January, sitting on about 12 of them. You're talking about $40 to get in, $60 at most. I believe my average cost was $52 per Starbucks $100 call. And at some point on that day, they all touched around 800.
800.
And so, of course, I scaled out.
Yeah.
I do still own 4 of them.
Yeah.
But you're talking about going from $40 to $800. That's pretty legit, in my opinion.
Hey, man, that deserves definitely a round of applause. Oh, I think that deserves
Congratulations. Have the dark side.
Hey, man, good job on that, brother. Look, oh yeah, we're gonna have some fun tonight, man. Look, man, you gotta let me figure out the voices. Yeah, man, but congratulations on that win, man. And that's just to say, like I say, people always say, I need a lot of money. I need a lot of money. No, you need a little money and big patience.
Yeah.
Right? Because we know eventually Starbucks had not fallen off, right? But the big thing is we always talk about the factors that goes around those companies. And so when you think about news that may come, right? When you think about changing of the people who run the company, the biggest thing that made Starbucks go from $70-something to $93, $95 in one day was a switch on the CEO.
Yep.
And so Chipotle, y'all know Chipotle stock went from I want to say Chipotle stock was $0 to $3,500 per share. $3,200, $3,000, all of the above. Every year, Chipotle has been making money year over year. Sales have been increasing. In the pandemic, people were still buying Chipotle. They were still going up. Chipotle CEO said, well, I'm going to go over to Starbucks and recreate the magic at Starbucks. They believe in him, obviously, right? Because big money put the money inside of Starbucks, and so there we have it on what we went on that day, man. So big shouts out to you, Jose, for that one. And so we got a few more plays tonight that we'll get into. And please, people, check these out, right? Go do your research yourself. If you go back to the previous episodes, we've told you so much on how to go back and do that research. We'll look at a little bit of how we do that research tonight, but hey, go back and do your job, people. All right, so that'll do it for that. Now let's go over and look at our fear and greed index. Okay, so for this week, remember what we said. I always like to put this into context. Buy, right? This is when you start. So let's say, for instance, you're putting your 100 shares out. Bam, I'm gonna put maybe 25 here. When it close to here, I may add another 25. When we come over here, I may add another 25. That's my 75. And so over here, I'm almost full into the position, right? Because by the time it gets over here to the greed, people are getting ready to start selling, right? Everything is ran up. Now we got all the FOMOers coming in, right? Not the people who knew over here, this is where I should buy, because 1 year down the line, 2 years down the line, I'm going to wish it. But now once we get over here, we got the people who say, man, it's up so high, but it keep going. I got to get in. And so as soon as that happened, we start getting over here, and then everybody gets out, which is how we get back over here. We had the carry trade that happened. Everybody said interest rates are going up. I got to get out of this. It's been going up, but I got to go. And here we go back over to the fear. Remember, so buy, and just add a little bit to your position, hold, start looking at how to start scaling out, and go ahead and close that position out, because it's about to get rough out here, right? So if you look where we are now, our previous close yesterday was fear. 1 week ago, we were extreme fear. 1 month ago, we were fear. 1 year ago, fear. Man, you think it got any correlation to this time in the year?
Oh, yeah, definitely. Yeah. We're coming up on that September, October part. Just to keep going with KT's saying, we've been in fear for a while.
Yeah.
So we're not out of the woods yet, because I know September, it's just a couple of weeks away, and history says that September is usually not one of the better performing months. So I do think that wherever we're headed to the upside right now, I think it's short-lived. I do think that we'll have another pullback September going into October before we start to actually climb out of the extreme fear right in time, like KT said earlier, for that November. Now, historically speaking, parts of October are a little choppy and a little red, and then the market starts to turn around in November, December, January, February, March. So that's one other reason why we looked at opening long positions on these options that we got for January, March, and all the way into June. So, relatively inexpensive when you get a chance compared to where the market is in general. So, you got an opportunity to still think about what you have and reposition it before we start getting into that neutral and to that greed. What you don't want to happen is you get stuck, in a couple of weeks with profits, knowing that the market is going to go into a little of a downspin, unless, of course, you have something that is relatively longer term. If you have October calls or September calls or even, November calls going into September, I don't know if I'd hold them if they made you money. So.
Yeah, most definitely, man. Like you say, biggest thing is don't get caught with the bag. A lot of people, even we seeing it tonight, right? A lot of people will come in over here, and it's gonna be rough. Like remember, when it's red, things are on sale. When it's on sale at the mall, you go. Same way with the stock market. If it's on sale, go and get you some. All right. Man, I want to go. I guess we could take a quick look at the VIX. Let me see if I can get this pulled up real quick. Because the biggest thing I just want to look at the VIX on is let me see here if I can get the number. I just want to look at that number. So for the VIX, we are at a 14 for the VIX, right? And so this is a 1 day chart. So look at where we were 3 a.m., right? 16. And so if you kind of look at this, I wish I can do I want you to kind of look at both of them. And we'll kind of toggle in between to kind of see if it'll make sense for you. Hold on, wait a minute. Okay, here we go. Now, let me try to see if I can pull this up for us. We'll look at this here. All right, so in this tab, you can see the VIX, right? And so you see how as the day starts to decline, we're looking at 8:30, the market open, and the VIX starts to fall off a cliff. It hangs around so we get a nice dip this morning, comes back up a little bit, hangs around, and then it drops, and then it drops, and then it drops. On the other hand, you look at your SPY for today. Let me go to I guess we can go 5 minutes. Yeah, we can go 15 minutes, either way. Right? So we go here and we look at our SPY for the day. What happens? We open up, we get that pop, right? So this is our VIX on that first dip. Then remember what I say, we kind of hang around for a little while. Then VIX did that drop. What happened? We get a raise, hang around a little bit. VIX, remember, it had that drop. What happened? We got a raise. We got another raise. And end of the day, we got another raise. And so if you look at those VIX and kind of keep your eyes on that correlated, that means the volatility is coming down, and that lets you know we are heading in one pure direction. And what happened as that VIX came down, our SPY trended up. So just kind of showing you all those correlations on when you're trying to get to the bag, man. Anything to add on that?
No, just, you're absolutely right about the correlation between the two. And I also just want people to know that what was a week or so ago, maybe even a week and a half, VIX was at $30.
Yeah. That's
maybe 35.
Let's look at it. So I'll go to the 3 month calendar. Bam, look at that spike. What is that? 38. Dude, this was August 5th.
Yep. And at that time, we were talking about it had to have been something extreme.
Yep.
And so buy. And if you bought any SPY calls or any other calls after that rise, then you caught some profits.
But if you missed it, shame on you, man. All right, man. That will do it. What we'll do, y'all, let's take a quick break. And when we get back, let's get into we just gonna go straight into the platform probing, looking at some plays. So I got my side. I'll pull up their trade view, kind of jump back in. Jose is going to share his screen. So when we come back, Jose, you going up first?
Yeah, I'll go first.
All right, y'all, let's take a quick break. All right, Trey, what up? I love the chase and the hunt, and I set the pace when I. Hold up, baby. All right, y'all. Welcome back. It's AdminisTraders Podcast. Man, we just dropped 30 minutes of straight bangers. Went through our fear and greed. We went through our VIX. We went through our what else we went through, Jose? Shoot, our news, man. We went and looked at the news. We showed in real time what happened today. We looked at the VIX. We looked at the SPY. As the VIX came down, volatility lowered, that SPY took off. Look at those people. Kind of check that out. I mean, we just showed you in real time what it looks like. All right, Jose, man, what you got for us tonight?
So I'm going to talk about one stock with based on our RSI and based on our MACD, like we have in the past. And so I'm going to share this screen with this is at investing.com. Can you see this?
Yes, sir.
So if you notice the one thing about this chart, when you're looking at it, you see at the very tail end that we are actually in an upward trend. So I want everybody to pay attention to that far end, right around here, all the way to here. We are in a rising wedge. This is a 1 month chart, but what I also want you to look at is that we have made a double top in Apple, which means that if you understand some of the technical analysis of your charts and charting, a double top is where we begin a little bit of a dissension. And the reason why I can confirm that is because our RSI is at 63.22, which is almost very, very overbought. Remember, at 70, we are overbought, and at 35 or 30, we are oversold. So we are definitely headed toward that overbought section. But I do want to make sure you understand that we are at a double top. So I expect this stock to see how we broke down here. And we broke down here. I expect it to break down here. We see our MACD lines that are about to cross. We got our moving averages, the 12, 26, and 9 together converge to make this MACD. You see where we've crossed here, we went up. We crossed here, red over blue, we went down. So again, red, I believe, will cross over this blue line. And I believe that we are going to go to the downside. So with that being said, the reason why I bring that up is because I think we have an opportunity for Apple to get down to around 212. Our first stop is going to be around 218. I think we do that, in the next week. And then, with September coming, I anticipate that we could go down to 212. I really don't want to see 198. I really don't. But if we got past and broke through the 212, I do believe we would hit this 198. But if we did it relatively fast in September, I do think we would be okay, because I keep looking at this high of 236. And I think that if we go to the year view, we definitely could potentially get back to that 236. Now, at 198, I definitely will be or add to anything that I have. I do have $250 calls right now. We're at 225. So I do have 250 calls for January. So I'm not too worried if we go, like I said, to 218, quite possibly 212. I'm not that worried if we can do that here in December. In September. Like I said, I really don't want us to go to 198, but if we do, I'm going to buy more of what I got. Definitely, I do think that we pull back a little bit to this line right up in here, 218. So be on the lookout for that. If we bounce off to 218, to add to what you have. Now, I also have June 2025 calls for 300. So again, not too bad a shape with Apple. I can start trimming some of those profits from the 250 calls if, in fact, we start to go too far down. Like KT always says, use them stop losses to make sure. Uh,
Woo!
volume is coming back. One of the things that we noticed up in here when we went to the downside, we had a lot of volume. So the volume is starting to pick back up. One of the things that I always told myself and others when I first started investing, in particular with like cryptocurrency, is like volume always comes before price. So once you start getting an uptick in volume, see how we
Mm.
started getting uptick. Either we're going to have a sharp down, or see how we increased in volume, and then we went up. So pay attention to that. If we start getting an increase in these volume bars, I think we could see a little bit of movement to the downside for Apple. So 218 would be a good time for me to start adding to any positions that I have long term. Definitely again at 212. But if we start getting to 212, I may consider selling some of those. Or if we break 218, I might consider starting to sell off some of those January calls because they're in the green right now.
Mm-hmm.
Definitely, we'll start to think about it if we break that 218. I do think we're okay. Like I said, I think we're okay right now, considering we're at 225. We get to 218, and you know what? And we may not even touch this, depending the way Apple is trending right now, because of this big drop that we had. Um, I do believe that we can continue to go up, but I want to caution everyone to know that we are at a double top. That doesn't mean that we have to break all the way down into here, but just know that there will be some pullback in here. You know, whether it's a $6 change, a $12 change. You know, I do anticipate a little bit of a pullback in here before we take off.
Mm.
I do, you know, we want to call that the dip and rip. So,
Different.
so definitely that's my call for the is Apple.
Yeah.
Um, we've been. I know there's a y'all may think, well, there's a lot of these stocks that we play over and over and over again, but as you start off your journey into options trading or even stock trading, and we the big push is to diversify and all that. But if you've got proven companies that you stick with through the ups and the downs, you can be very
Mhm.
profitable.
Yes,
Um,
sir.
as you learn the different companies that are out there, the different sectors, how to play all of them. I think the biggest advice we can give anyone new is that if you are familiar with a particular stock, and you turn that into options plays, you can keep playing that same one. You know,
Mm-hmm.
you hear us all the time talk about SPY, QQQ, Tesla, AMD, Apple, Nvidia. We, if anything else, we play them all the time for the ups, the downs, whatever, because we are familiar with those, and people, as you go through this process and you learn the intricacies of the chart reading, it's good to pay attention to one particular chart as you go through and learn it all.
Most definitely, man. Most definitely. Um, awesome information. Looking forward to what's going on with the Apple. Like we said, we just showed in the heat map. Tech is having a rebuy, so gaining a little momentum. But like you said, this is an election year. So as we come up to that election, still a lot of volatility, as you've seen, still a lot of fear in these streets. Double top means that we could hit, we could push through, but I think we don't count anything until we find direction on Apple, man. I wanted to kind of jump into a few plays too. We got about 15 minutes left. Man, if you could pull that back up for me, because what I want to look at on Fiverr will be very helpful for looking at the RSI and the MACD
Okay.
on why I want to kind of look into it.
So which one?
Fiverr.
FIVR?
Yes, sir.
Come on, man.
Yeah. Ticker FVRR.
Oh, FVRR. That's right.
Yes.
Can't find it. This thing can't find it. Woo, there we go.
Okay, man. If you could share that with us real quick. All right, let's kind of look at this. So, the biggest thing that I'm thinking about with Fiverr and Jose, let's see here. Can you give me what is that? What is that chart right there? That's a
I think it's
3 month.
It's a 1 month. This is a 1 month.
Okay, 1 month. Can you go out a little further for me?
1 year.
Yeah, let's do 1 year.
Okay. All right.
All right. So what I'm looking at is from the RSI, Jose. What are you seeing on here? Is Fiverr overbought, oversold?
So if you look at this RSI right in here, we're sitting at a 59 right now.
Mm-hmm.
So we're about 11 points away from being overbought.
Yes.
So we got room to the top.
All right. Now, if you can close in on that a little bit, let's kind of look at that high. Close in on it. I want to get a bigger picture. So yeah, there we go. Now keep closing some more. Bam. You see that? You see that big curve back over there when you go smaller? That's what I want. I want to see the top of that curve.
This one.
Yeah, where we at over here at this highest wick that's right under 29.30. Oh well, yeah. So see what I'm talking about? Yeah, what how much is that right there?
That's 44.83.
And where are we at right now?
25.96.
I mean, we got a little room, man.
Yeah.
We got a little room. And so that is one of the reasons why I want to look at that Fiverr. It has a great risk to reward on it. And so I think if we hold, we start seeing some momentum, because if you can look back at that push, right here, they are starting, those last 3 candles kind of tells me we're gaining a little bit of strength coming in, right?
Oh yeah.
And so how many days out of those candles? What is this? 1 week?
Yeah, this right here is the
Yeah. So if you look, the last 3 weeks, Fiverr has been gaining their strength. And so they are getting ready to kind of tap that line of about 27.28, if I'm not mistaken. That's what we're looking at.
Mm-hmm.
And so all we thinking of, once they get past that line, we got earnings coming up. Then we should be able to take on off. Our RSI is still not saying we are overbought. We have room to roll on the RSI. And from our MACD, what does it tell us?
So our MACD looks like we got some. See how we got a little gap right in here.
Mm-hmm.
So the gap lets me know that we still have some room to go where we can extend possibly out into here. So if we did extend out that way, we're looking at a good $30. Oh, yeah. But look at that, KT. So if I did that, look what happens all the way to the left. So my next gap to fill on the upside is around $29 to $30 before we get to this gap over here. So so if I'm looking at the gap fill right here, and then I'm looking at our overbought, oversold, and I got room to run, and then like I said, you still got your MACD, which is your 12-day, your 26-day moving averages. You still got room to get off in here. So I think our next up would be around, like you said, $30.
Yes, sir.
Getting us to that $30. So now, can I just say that right in here? Can you see that?
Yeah.
We got a little bit of a cup, baby.
Yes, sir.
I
agree with that.
And so definitely, if you like, when KTO, when we blew it out, this is our top to get to. So we can definitely get to that 30 relatively soon. We bust through that. We got 36.
Ooh, and
So
it's about
yeah.
63. So that is one of my plays where I want to say kind of keep this one on the radar, kind of gives you an idea of what we're looking at. Next one, Jose, I think I like working with those because mine only shows the rates. I mean, only shows EMAs, but it may be easier to explain by just having those pure numbers. So, man, if you can take us to New Month, NEM is the ticker.
Oh, we're talking about gold now.
Yeah. So I want to get into a little bit of that gold.
All right. So first one we're gonna look at. This is the 1 month. Okay. So this is our 1 month chart. Now, one thing you'll notice, you went from 45 to 51. So we are definitely overbought at the moment. So I'm gonna zoom back in, to here. $51 or so up here at the top. Definitely overbought. We are at 73.21. But according to your RSI, you can go up a little bit more before you start to pull back. So we still have a little bit of a gap right here between the moving averages on the MACD, but definitely need to pay attention to that 72 on the RSI, which is at overbought. So now that I zoom out on the 1 year, we look like we're in some all-time highs, KT.
Yeah, and so that's kind of why I wanted to talk about this. My rationale for buying this one, like when we look at our RSI, those are telling us that people are coming into gold. But this is one of those ones when I look at what's going on in the world around us. And so as we talked about in the beginning, gold is often seen as a good investment when the Federal Reserve is cutting interest rates. And so some of the reasons why is gold is considered a safe haven asset. So it tends to retain increase in value during times of economic uncertainty. So when the Fed cuts the rates, it can signal economic challenges, leading investors to seek out safer investments like gold, right? The next one is the weakening dollar. I talked a little bit about this earlier. Lower interest rates often lead to weakening US dollar. Since gold is priced in dollars, a weak dollar makes gold cheaper for foreign investors, increasing demand, driving up the price. Inflation hedge. Rate cuts sometimes lead to higher inflation. Borrowing becomes cheaper, spending increases. Gold is traditionally viewed as a hedge against inflation because it tends to rise when the purchasing power of the dollar falls. We also have a low yield in bond. So with lower interest rates, the yield on bonds and saving account decreases. Investors may turn to gold, which doesn't offer interest but can appreciate in value, providing a better return in a low rate environment. And lastly, diversification. Gold adds diversification to investment portfolios, right? During times of economic shifts, such as rate cuts, having a portion of assets in gold can balance potential losses in other areas. And so that's why I started to look at the gold. I've been buying up a little GLD, but Newmont is a gold miner. And so as gold begins to increase, the need for gold begins to increase. People saying, where can I buy? Where can I get it? And so that is the reason why I wanted to look at Newmont, because if you can see that they've been gaining a little traction, we have been bouncing off of our EMAs. So you can see where those dips at in the RSI, right? And that last dip, we just went ahead and took on off. And that's because interest rate cuts are going, the economy is coming back. And so that's why I chose Newmont, because I do believe with interest rates in this environment, being somewhere like gold will be our best bet.
And I also want to say, KT, with those excellent points when it comes to either newsworthy material or environmental aspects, I definitely agree with you to the point where I'm thinking I might jump into some. Yep. But like you were saying with this RSI, let me just show everybody that, like I was saying about this gap that we still have right here between our MACDs. I want everyone to come over here to this RSI right here, where we were at 72. So 80, 80.6. So we rode for a period of a week an RSI over 70. So there's no reason or there's no guarantee that this will come down yet, because see here, we still rode this RSI because gold was on an uptick, and now gold is back up on an uptick. So this, Newmont could have some momentum until we start crossing our MACD lines like they did here, and then that's when the RSI finally gave up. When we crossed right in here. So definitely something to think about. Just because we like I said, we talk about this overbought and oversold, but when you have technical analysis and you put it against everyday news or environmental aspects, sometimes they might cancel each other out. And with, like KT's been preaching with these rates and all that, gold has potential to keep going until you can only get so high and before you come back down to reality.
Yeah,
so something to keep in mind too.
We know Uncle Jerome is gonna cut, so we got to be ready, y'all. We got to be ready. So go in, kind of go look at your TLTs, right? Once again, I am saying TLT right now is about $90. I do believe, I do believe before it's over with, TLT is gonna be up there, people.
Oh yeah.
Let me see if I can get to my so here's my TMF. I'm gonna show this, man. We about to get ready to have to get up out of here. Got about 4 minutes left. Let me go just show you this this TMF right here. So this is my monthly chart. Let's go here. Let's go. I want to go 12 months. All right, let's go 12 months. So this is where we at, people. This is where we at. At one point with TMF, we were all the way up here, man. $344. The economy was good. This is right past. We was in January 2020, baby. Rates was low. Money was easy to get, and we were living the dream, right? You see, things was kind of normal around here. We had just got through with the 2008. They had to start tightening. I mean, it was tight. Then they had to start loosening because everything crashed. And so then that's how we made our way up here. Then what happened? It got crazy out here in these streets. They said we got to start tightening up the rates. We got to tighten. They went through the roof. TMF is here. But oh my God, we are starting to decline the rates. And so as we decline on the rates, I don't think we'll get back to 0 to 1% or anything like that. But I do believe we will get back to where it starts to make sense. And so within the next year, this is where I'm looking for TMF. Right now, TMF is closing at, what is this today? 58.24. That's what TMF closed today. I don't think that's going to stay, y'all. I'm just going to tell you the truth. $58 is crazy talk a year from now. We're going to double it. And I believe that, man. So, hey, that's all I can tell people, man. Just be ready, man. All right, man. As we get ready to get out of here, any final words before we close the door?
We may not be wealthy, but KT, I don't know if we've been wrong a lot of times.
No, man. I don't think so, man. Because we got so many confluences, man. We're going to really do our research before we bring it to the masses, man. So it's not too much, man. Hey, man.
I think I remember one time I got one wrong, but
hey, man, can't win. Huh? If we was perfect, bro, we would be rich. Right, bro? We do it all, bro. We just might well stop doing anything else but putting all our money in. That's it. Always a game, but the biggest piece is what research are you doing to make yourself better? So, man, I think that's it, man. We're gonna wrap this thing up, brother.
Man, it was good to be back tonight, man.
Hey, for real. So we'll see y'all next week. Life is kind of slowing down a little bit. This was my late night, and I still was here. It was a little rocky, but this is my late duty night. Next week, I'm back out regular time. Let's get back to the money. This week, we got Uncle Jerome coming. We got Fed Minutes coming out later this week. We got a little data that'll be coming out this week. We still got earnings, Lowe's reports in the morning. We had Palo Alto tonight. I seen they were up like $9. Lot going on. We are still on a tear. Please, people, remember the trend is your friend. Don't go against the trend. Don't anticipate. Confirmate. Yeah, that ain't even a word, but it sounds good. Get confirmation before you go in, y'all. All right, man. I think that'll do it, Jose. I'm gonna close this thing out. I appreciate you, brother.
Yes, sir.
All right, y'all. This is KT and
JoJo, baby. Have a good night.
Hey, signing out for the AdminisTraders Podcast. 100.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTV.
KTTV.
KTTV.